Hi everyone, let's cover my Elliott wave scenarios on Bitcoin, starting with what actually happened since the previous update that I posted on YouTube before traveling to the US. I'm currently in Washington, and as I'm traveling, the audio and webcam quality might be different compared to what you're used to, but hopefully still good enough for you to watch this update. So in the previous update, make sure to check it out, price was ranging over here. And the probabilities, as mentioned, were highest for price to take out this high at 98.9K and then take it from there. As explained, after taking out the high, we're looking for a retracement. And as also explained, if the move to the downside, the retracement, was a higher probability impulsive structure, we're looking for lower. If the probabilities were higher, this move to the downside was a three-wave corrective structure, we're looking for 105K. We're looking for higher prices. Now, of course, I was already traveling over here, but you can see price took the liquidity, took the high, hit the golden pocket, moved towards the downside impulsively, followed by a three-wave corrective move to the upside, a three-wave corrective range, and there you go. Price moves to the downside, very, very nice, and now we find ourselves at about 80K. If we then go to the daily time frame, I want to share two scenarios with you, which currently, from an Elliott wave point of view, have the highest probabilities. First of all, this one over here. You know about this 1, 2, 3, 4, 5 if you have been following this channel. Common target for your wave 4, the 302 to the 05, 82.6, 75.7. Invalidation 69.5K. After wave 4, we still look for a 5-wave move up in a wave 5 to new all-time highs. This move to the downside is then internally counted on the lower time frame as a W. Then we have our X over here, so a move to the upside, that's our X, and then another wave Y, a double zigzag to the downside, W, X, and then a wave Y. We do have some support where we are right now. So we have the daily naked point of control at 79.6K. You can see a bit of a reaction. And just below, very interesting, a daily naked point of control in confluence with a weekly naked point of control at about 76K, which also is still inside the target area for your wave 4 in confluence with the 0.5, which is your maximum target for a wave 4. If you do move to the downside, invalidate this wave 4 by touching 69.5K, then this scenario gets the higher probabilities, which is an impulse, 1, 2, 3, 4, 5, continuation of the bull market, still looking for all-time highs, but we are changing the beginning of the bull market. So instead of counting this as a wave 1, 2, 3, 4, look for a wave 5, and then end of the bull market, and voila. We're looking for a multi-1-2 here, 1, 2, 1, 2, 3, 4, 5, 4, 5. Possibly, maybe another 1, 2 over here, but that's stuff for later. So in this case, as your wave 4 in green is the higher degree wave 4, right? The green count is the higher degree, 1, 2, 3, 4, 5. Inside the green wave 3, we have the lower degree blue count, 1, 2, 3, 4, 5, right? The target for wave 4 in green, wave 4 of a higher degree, is the range of the blue wave 4, the wave 4 of a lower degree, which is basically between 73.9K and let's say this important support resistance area here at about 52K. And inside that area, we have the point of control at 67.5K. And that is the point of control of this whole range. Take a volume profile from the beginning to the end. The red line is the point of control, 67.5K. Important support. Now in this particular case, we're then looking for a bigger three-wave corrective structure in a wave 4 to the downside, touch support, look for signs of strength, and still looking for all-time highs. The probabilities remain lower for impulsive structures to the downside here till basically proven otherwise. So yeah, of course, the move to the downside here looks impulsive. Wave Cs are also impulsive. It's mainly the beginning here, the beginning, which is incredibly messy and stupid for a multi-1-2, right? If you really want to be bearish, then this is the end of a bull market, and you are looking for a multi-1-2, and you just go and dump, right? You're going to move below 49K. You're going to move below the previous wave 4 range, basically, right? In this case, you then have a wave 1, 2, 1, either 2 over here or the green 2 is parked there. Doesn't matter. You're looking for a multi-1-2 and down in 3 you go. Now, if we are in a wave 3, you want volume to move up significantly because you are looking for an extended wave 3. Wave 3 is the most common extended structure in an impulse. 1, 2, 1, 2, 3, long 3, 4, 5, 4, 5 at a later stage. Wave 3 most often has the highest amount of volume, but at the moment the volume in this low is higher than any of the candles over here as price was moving down. So in other words, we are creating a lower low on the chart on lower volume. Even locally here, you can see we're moving down on lower volume. Where is the volume? Also, this wave 2 is 11 times longer than this wave 1, low probabilities. If you put this 2 over here, then the green wave 2 is 5 times longer than wave 1, low probabilities, right? It's just a big mess for a multi-1-2. It is still a higher probability from an Elliott wave point of view, corrective structure to the downside. Still looking for a wave 4, still looking for a wave 5. Now, if we then look at the 1 hour time frame, then I personally always like to look at this. This is your typical impulsive structure, right? I generally cover this in live streams, but because I can't update as often as I usually do, I just want to cover it in this video. So what you're looking at here is, of course, a couple of trend lines, but this is a typical impulsive structure, right? So we have a couple 1-2s, a bit of a grind, quick move down, and then you end with a bit of a grind. These are your 1-2s, that's your 3, these are your 4-5s, right? 1, then you have your 2s, 1, 2s, right? So your multi 1-2 is in here. You get your quick move down, and you're looking at a couple of 4-5s. What you can nicely see here as well is that, of course, there's lots of overlap over here. Then you start to create gaps in price action, right? So we have a range here, we have a range here. There's a gap in between, right? Range here, gap in between. That's what you want to see in a wave 3. Right? Explosive move down, no overlap, quick, right? Then we start to get a bigger bounce, right? Move down, and the next bounce comes back into this range. So now we start to create overlap again. And that is also what we like to see when we talk about 4-5. So we have a couple of 1-2s here, then we got a 3, and then we're looking for a couple of 4-5s to end an impulse. We have a grind, quick move down, we look for a bit of a grind, and then eventually we get that reversal towards the upside. And that move towards the upside, if impulsive, right, impulse, we want to see a 3-wave corrective structure, and then we're looking for price to continue. If the move to the upside by itself is a 3-wave corrective structure, oh cool, we're looking for the low again, right? It's as simple as that, right? Now then, something else. On the 4-hour time frame here, or at least 4 hour, you can also pull it on the 1 hour, but a Fibonacci that I like to keep an eye on in an impulse is the 0.618. The 0.618 is an invalidation for a wave 4, and in a way it's also a confirmation that if you do touch the 618, you have a finished structure, right? Something finished. So basically, as price moved down over here, if you had my chart open, very likely you saw this 0.618. I pulled it from this high to first the low here and then the low here, and I still have to pull it to this low. I didn't, it's still set on this one over here. But basically, as long as price does not touch the 618, probability is higher. You're looking for a couple of 4-5s to the downside, and of course count the 1-2s here. 1, 2, 1, 2, 1, 2, 1, 2. There's possibly a maximum of 4 1-2s, so you can arguably try to count 4 4-5s, and then you look for the reversal. You know, from a swing trading perspective, if you just wait for a bit of a bounce, touch the 618, okay, cool, we got a low, observe the structure up. If impulsive, 5-wave, 3-wave move down, potential long, look for higher. Right. The 618 invalidates wave 4, as you can see quite clearly, is not touched. Price falls to the downside, which is exactly what you want to see in an impulsive structure. So what we can do now is pull the 618 to the new low here, 90.2K. That is where the 618 is at. If price moves up, touches 90.2K, the probabilities are very low. You're looking at a wave 4 here, and the probability is higher. You finished something at that particular low. And something else, which I suppose is in hindsight, but I wanted to include it from an educational point of view. I actually put this on my chart before price moved to the downside here, but of course, right, I'm only recording at a later stage, but I can show you here that we touched the 886. I might actually have to just full screen this so you can see here the 886 on the chart, right? As price was bouncing, I shared it in silver. I've actually been very, very active in silver, just for your information, right? Even though I don't always have time and stuff while traveling to update on YouTube, pretty much every morning I write something in silver. But nonetheless here, price touched the 886, taken from the low to the high, increasing probabilities to take out this low. It is very common after an 886 touch to get a bounce towards the upside and touch at least the golden pocket, which is what you see here. And then price eventually falls and takes out the low, and that is basically, of course, then what happened. We fell down, we took out the low, and now here we are, right? We also have some news. So this is Central European Time Zone news, by the way. So Friday, February 28th, 2:30 p.m. Central European Time, we have some high impact news. So make sure you trade safe, as it can increase the volatility on the chart. And then if we look at the probabilities, well, due to the 886 touch locally, the probabilities were higher anyway to take out the low. So that, of course, played out because we took out the low. And on the daily time frame, probabilities are highest that whatever this is, it is corrective. Still looking actually for a WXY if I do count it in more detail. WXY is what I'm looking for. Looking for this structure to be a wave 4, and then eventually still a 5 to the upside to take out the all-time high. Of course, price continues towards the downside, and as I explained in, I think, the Telegram general chat, if I'm not mistaken, because I got a bit of a question. Basically here, price continues towards the downside so far. I want to see a high probability setup from an Elliott wave point of view, and something that I look for, right, when I talk about wait for signs of strength. Everyone has their own plan, their own strategy, their own tools, but something that I like to see is price hitting one of my support levels, create an impulsive structure up, a clear three-wave corrective structure to the downside, and that to me is very interesting, and I'm happy to be part of a move when that happens. I'm not very happy to be part of a long as price just keeps dumping. Now, of course, what I do keep an eye on, because that's quite simply one of my most favorite setups, is the grinding structure. So basically this over here, grind at the beginning, sharp move down, grind at the end. That's when I start to be aware of the potential of a bounce. So I start to keep an eye on more local, lower time frames, signs of strength. CVD, market structure, flip resistance into support, 5-wave low time frame impulse, 3-wave retracement, etc. But the fact that we had the quick move down without overlap, and now we start to create ranges over here with overlap again, it makes me aware that this move to the downside over here could be ending, and that we are looking for a bit of a bounce. Of course, keeping an eye on the support level over here. 76K is very, very interesting. So that being said, I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.